The local share market surges as investors look to better economic times. That's our main story this morning. Also today, mortgage rates start to rise, more regulation for buy now, pay later groups on the way, and Instagram tries to reduce the amount of screen time for kids. It's Thursday, the 9th of December 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
Then stay listening for Sean's chat to Philip Ryan from Trilogy Funds about what's happening in the property market. But first, Sean, as I mentioned, the local share market rallied hard yesterday, rising 1.25%. But the big question is, can it keep going?
Well, it's a very hard question to answer, Michael. Most market watchers expect the S&P ASX 200 to rise over 2022, having jumped more than 12% so far this year. The market yesterday had one of its best days of the year, closing at 7,405 points. And remember, it was up by more than 1% on Tuesday. It's now at its highest level in more than a month. What's happening on global markets is that concerns about the economic impact of the Omicron variant of COVID-19 are receding. While the variant is spreading, hospitalisation rates aren't rising. China's making positive signs about stimulating its economy, and investors are expecting a return to economic growth next year. And it's not only investors that are upbeat. Remember, earlier in the week, the Reserve Bank played down concerns about the Omicron variant and was very positive about the economic rebound. Investors are buying up globally and locally. On Tuesday night, Wall Street surged with the tech-heavy Nasdaq up 3%, while the broader-based S&P 500 was 2% higher. That was the best session since March. European markets are also on a run. Asian markets have performed well in recent sessions, and the Chinese yuan yesterday hit its highest level since 2018. Now, the key concern for investors is what's going to happen in the Chinese property market. Deadlines yesterday passed for debt repayments from Evergrande Group and Kaiser Holdings. Both those two big property groups didn't make the payments. People are a little worried about that. But all in all, investors are feeling much more comfortable about the economic outlook. While equity valuations remain high, very low bond yields means investing in fixed income isn't particularly attractive. Yesterday, all 13 sub-indices of the S&P ASX 200 rose, with the telco, technology and materials indices all up more than 2%. That's a great day. The standout was Zipco, which was up 11%, following a similar rise on Tuesday. Buy now, pay later market leader Afterpay was up 4%. The iron ore miners did well as the price of ore rose sharply. BHP and Rio Tinto were up more than 2%, and Fortescue Metals jumped 3%. Now, the local bourse is still below its peak of August this year, and most market watchers think there will be a few bumps and bruises ahead. But it's ending the year really well, and certainly a long way in front of where it was 12 months ago. And most market watchers expect the upwards trend to continue in 2022.
Okay, so how are the Aussie dollar and commodity markets performing?
Well, Michael, the currency continues to creep higher. It's trading at just below 72 US cents this morning. Oil prices were higher again overnight, and a barrel of Brent crude is fetching just under 76 US dollars. Gold is worth around 1,785 US dollars an ounce.
And did the strong run in overseas markets continue overnight?
It was mixed. Wall Street was generally higher in early afternoon trading. That's a pretty good effort given the surge 24 hours earlier. European markets were flat or a touch lower.
Okay, we'll be back in a moment with the rest of the day's business news. Sean, there's plenty of stories around this morning. Australia has joined the United States in imposing a diplomatic boycott of the 2022 Winter Olympics in China.
Yes, they're due to be held in February next year, and we won't be sending any government representatives, so of course the athletes are still attending. Prime Minister Scott Morrison said the decision shouldn't come as a surprise, and any reprisals from China would be completely and utterly unacceptable. Mr. Morrison said the decision reflected a protest against human rights abuses in China, the same reason given by the US. Federal Labor supported the decision, and then, of course, a few hours later, Beijing hit back, saying the decision contradicted the federal government's claim it wanted to improve relations with Beijing.
Now, I mentioned this one at the start of the show, Sean. Mortgage rates are starting to rise.
Yes, they're getting a bit of a run on. Westpac yesterday became the latest lender to lift fixed-rate mortgages. The bank has lifted its fixed-rate loans 4 times in the past 2 months, and it's not alone. plenty of other lenders are doing exactly the same thing. Now, few ways to think about it, and let's look just beyond the homeowners. Fixed rates are priced off market interest rates, and they're rising because investors are worried about inflation. Also, the cost of funding for the banks is increasing. The Reserve Bank in June turned off its term funding facility for banks. That means that accessing money is now much more expensive than it was back in June. Therefore, higher rates should be good news for banks, which are trying to rebuild net interest margins. Michael, I'm trying to put a good light on this. Bank shareholders should actually be happy about this. Of course, it's not such good news for people wanting to lock into a fixed rate loan, and it's unlikely that this will be the last of the rate hikes.
Yeah, it tends to be that as soon as you start talking about rates, people's minds straight away go to the mortgage, isn't it?
They do, but there's actually lots of other sides to it. Pensioners who rely on income from bank deposits, bank shareholders, they all benefit from this.
Yeah, certainly worth looking at those other angles. Now, Sean, Moderna's vaccine, the unfortunately named Spikevax, is back in the news. What's the latest?
I love the fact that you dislike the name Spikevax, and I get it.
I just don't know how the marketing team gave that one the approval.
Fair point. The Spikevax vaccine has been given the go-ahead by the Therapeutic Goods Administration to be used as a booster jab for people aged 18 years and over. In other COVID news, Victoria reported its first cases of the Omicron strain of COVID-19 yesterday. The state recorded 1,312 new cases of COVID-19 and 5 deaths. There were 403 cases in New South Wales, the highest number in almost 2 months. The 14-day trend for the state is definitely upwards, and the state's Chief Health Officer, Kerry Chant, said pubs, clubs and end-of-year parties are driving the rise. But the trend rate for hospitalisations is down, and that's great news. The ACT recorded 8 new cases of COVID yesterday and 1 death. In Queensland, 2 already announced cases of COVID have been identified as Omicron. One was determined to be a new lineage of the variant.
Okay. Now, you mentioned it yesterday morning, Sean, but the government is looking to regulate payment systems more tightly.
Yes. Treasurer Josh Frydenberg yesterday outlined his plans, and it includes legislating a broader definition of what a payment service is. That means it would capture buy now, pay later groups, as well as digital wallets such as Google Pay and Apple Pay. It would also include a new licensing regime for the crypto asset sector, particularly crypto exchanges. These are changes that local banks have been pushing for, and the big technology companies won't like them. Now, almost half of all Australians make payments using their mobile phone, and that's accelerated as a result of COVID. What the changes will do is even the playing field. That'll benefit the banks. It will also give the regulators more power in the payment system. Another interesting development yesterday, Michael, the Reserve Bank said a central bank digital currency in wholesale markets could result in improvements in efficiency, risk management and innovation, but more work's needed. The Reserve Bank remains sceptical about a central bank digital currency in retail markets. What's it all mean? Well, it means that a digital currency for use in large-scale international transactions between governments and corporates might work, but a digital version of cash to buy a can of Coke, for example, probably won't. Well, at least that's what the Reserve Bank thinks.
So Bitcoin may just survive yet.
It might.
Now, Sean, there's plenty going on in the renewable energy space. AGL Energy and Fortescue Future Industries will work together to examine a potential green hydrogen plant in the Hunter Valley at the site of AGL's 2 coal-fired power stations.
Yes, the partners will spend 12 months to study the feasibility of a project to provide clean fuels to companies in the area. If successful, the Hunter Energy Hub would use grid-scale batteries, solar thermal storage, wind power and pumped hydro to fuel the hydrogen project. Fortescue founder Andrew Forrest yesterday said repurposing fossil fuel infrastructure to create green energy was the way forward. Now remember, Fortescue set itself a target to produce 15 million tonnes a year of green hydrogen by 2030.
And Sean, as well, Woodside Petroleum wants to invest $7 billion in emerging new energy by 2030 as the oil and gas giant looks to transition its business to greener sources.
Some of the money will go to hydrogen and some to solar thermal. Woodside, which creates energy from fossil fuels, wants to be an early mover and support the decarbonisation goals of its customers. That's according to Chief Executive Meg O'Neill. But she added that gas would remain important in the energy mix for decades to come. For Woodside, which in my view is in no way an early mover to renewables, It demonstrates the challenging balance it will have to navigate in coming years. Earlier in the year, it said it would merge with BHP's oil and gas assets. Then last month, it gave the go-ahead to the massive $16.5 billion Scarborough LNG project. Now it's investing in renewables. It's already announced early-stage hydrogen projects near Perth, in Tasmania, and in Oklahoma in the US. It's trying to have its cake and eat it, and it's not that easy.
Okay, Sean, what's making headlines in today's news media?
The Australian is reporting that the federal government will today bring forward $280 million in funding for manufacturing as it pushes to reinvigorate the sector. And the Financial Times is saying that a third shot of the BioNTech Pfizer COVID-19 vaccine offers protections against the Omicron variant of the coronavirus, while just 2 doses shows significantly reduced effectiveness against it. And that's according to a preliminary study.
Running through some of the other stories around today, Prime Minister Scott Morrison says he suspects former New South Wales Premier Gladys Berejiklian won't enter federal politics 2 days after calling on her to consider running for the seat of Warringah on Sydney's Northern Beaches. He said he'd welcome her, but he suspects that she probably won't do it. He's certainly cooling it all off now after a fairly heavy couple of days of speculation. So you do wonder whether maybe there was a phone call from Gladys to Scott Morrison there over the last day or two.
I dare say there was. Last year, the total fertility rate fell to a record low of 1.58 babies per woman. COVID-19 was the main reason, according to the Australian Bureau of Statistics. The total fertility rate has fallen the past 30 years from 1.9% to 1.58%, while the fertility rate of young women aged 15 to 19 has tumbled in that time. The rate for women aged 40 to 44 has almost tripled.
Sean, Virgin boss Jane Herdlicker says it's an open question whether the airline will restart long-haul flights. While short-haul flights to Bali, Fiji and New Zealand are part of the strategy, Ms Herdlicker says having strong partnerships with other airlines is a priority.
Optus spent $1.5 billion on licence slots to access low-band spectrum capacity. Only Telstra now has more low-band spectrum slots. These slots are important to provide telecommunications in regional areas of the country because low-band spectrum can travel further and more efficiently. In total, Optus and Telstra spent more than $2 billion on radio wave spectrum yesterday. The upshot of all this, Michael, Optus should be able to improve its services into rural and regional Australia, providing more competition to Telstra, good for consumers.
Yeah, great news. The 300 megawatt Victoria Big Battery near Geelong, one of the world's largest, has come online in Victoria and is expected to unlock peak power capacity over the summer. The battery was in the headlines a couple of months ago after catching fire while it was being built. It is a joint project of Tesla, AusNet Services, UGL, Downer, the Australian Energy Market Operator and the Victorian Government. What's the key overseas news this morning, Sean?
The US is putting pressure on Germany to block a gas pipeline into Russia if Moscow decides to invade the Ukraine. This morning, US President Joe Biden used a 2-hour call with Russian President Vladimir Putin to warn of strong economic and other measures if an invasion occurs. The crackdown in China continues. According to the Financial Times, China is preparing a blacklist that's expected to tightly restrict the main channel used by startups to attract international capital and list overseas in a bid to limit the role of foreign shareholders in the country's next generation of tech companies. The blacklist will target new companies in sensitive sectors. And Instagram will encourage users to take a break, allowing them to see pop-up messages when they've spent too much time looking at a particular topic. Users can also decide to be nudged to take a break after they've spent 10 or 20 or 30 minutes on the app. It comes as Insta's parent company, Meta, fights allegations that too much time spent on social networks is hurting the mental health of teenagers. I wonder how serious they are.
Yeah. All right. Up next is the Daily Interview, Sean. And today you're talking to Philip Ryan from Trilogy Funds about investing in property. And we're not just talking about residential.
That's right. We went through industrial, retail, office and residential. Philip has a great take on it all. He has a fantastic overview of the whole sector. Well worth a listen.
Yeah, it certainly is. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 9th of December 2021. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.